Hi, this video is going to be on how to do problem 23-1B. It can be found on page 1171 of your textbook, or we can go to Wiley Plus, chapter 23, and if you scroll down, you will see problems. And I like to do full screen. And you want to scroll down to the B set. So problem 23-1, you will see that there is an Excel icon, so that means there is an Excel spreadsheet. To get that, you would go to your additional resources. So click on the additional resources and look for the Excel templates. And it should link out the Excel spreadsheets for chapter 23. Save it to your local hard drive or a USB. And once it finished downloading, you should be able to access the file. You'll notice that there are several different files listed on the tabs. Scroll over until you find problem 23-1B, and then you can use this to follow along with the video. So pause, make sure you have the page 1171 material as well as the information for the template. So let's go ahead and read the problem. Mercer Farm Supply Company manufactures and sells a fertilizer called Basic 2. The following data are available for preparing budgets for Basic 2 for the first 2 quarters of 2014. Some information they give you for the sales, direct materials, desired inventory levels. So they're actually calculating the inventory levels of the finished goods and the 2 direct materials, crop and dirt. Then you go on to see information for direct labor, selling and admin expenses, and then some information regarding the income taxes to use on the budgeted income statement. So for this problem, we are going to prepare a budgeted income statement for the first 6 months of 2014. Let me fix that. 2014, and all required supporting budgets by quarter. So we're going to prepare some budgets from the master budget. Note, use variable and fixed in the selling and administrative expense budgets. Do not prepare the manufacturing overhead budget or the direct materials budget for dirt. And the reason why we're not doing that is because it's already done per the instructions above. So the first one we are going to prepare is our sales budget. And here we're going to fill in, similar to what we did in class, expected units, unit sales. And then we're going to put in the amount. Above it says that we had 40,000 for quarter 1, 50,000 for quarter 2, and the selling price is $63. So 40,000, 50,000, and $63. So 40,000 will be our first amount. And you see the formatting is already in there for you. Next quarter, 50,000. So the total of those 2 quantities would be the 40,000 plus the 50,000, which gives us 90,000 in sales. Our next item would be unit selling price. And that was $63. And that was $63 for both quarters. So I'm going to go ahead and just copy over. And we don't add that up because it's still 63 for all quarters involved. And then finally we do our total sales. And that would be the $63 times the $40,000. And again, since there is a formula noted in our cell, we can just copy that over and it will automatically give us the amount. And it's not big enough, so I'm going to do a double click to widen that just a little bit, and that will be the amount for the second quarter. And again, we want to add those two together. So the two total sales for quarter one and quarter two, we can add it together, and then we'll do a double click here to widen the cell, and that'll be the sum of these two. As an alternative, you could also take the 63 and just multiply it by the 90,000, and you should get the same results. That concludes our first budget, our sales budget. Next, we will do the production budget. Now, with the production budget, we need to know some things about their desired ending inventories. So item 3, it talks about the inventory levels for basic 2. So January 1 would be the beginning of quarter 1, as well as the ending for quarter 4 of the prior year. For April, April 1st would be the beginning for quarter 2 and the ending for quarter 1. And July 1 would be the beginning for quarter 3, but also the ending for quarter 2. So the bag 2, basic 2 is the finished good product that we are producing for desired inventory levels. So we're going to go ahead and prepare the production budget. To do that, we're going to start off with our expected sales. So our first line item is expected unit sales. And we're going to get these amounts from our previous sales budget. So I'm just going to reference the 40,000 and again plus or equal sign the 50,000 for quarter 2. And of course, when you add these two together, you still should get the 90,000. Then we are going to add the desired, where did I put it? Oh, undo, Control Z. So add the desired ending finished goods unit. And that would be at the end of quarter 1, so that would be the beginning of quarter 2. So that amount would actually be the 15,000. So I'm going to reference the 15,000. For quarter 2, the ending would be the beginning for quarter 3. So I'm going to reference the 20,000 July 1st date. And those are my ending inventories. And then I'm going to add the expected unit sales plus the desired ending goods to get my total required units, which is just taking the 40 plus the 15. And I'm going to use the same formula here. So I'm just copying the formula over to quarter 2. Now the fourth row, this will be less our beginning finished goods inventory in units. So we are going to take the beginning balance for quarter 1, which was to be 10,000. So that's going to be our reference. And the beginning for quarter 2 would be 15,000. So when we do the math, 55,000 minus the 10,000 gives us the 45,000, and we're going to call that required production units. And we'll call the second one the same, which is required production units for the second quarter. And I'm just going to copy the formula over here and simply put that's the 70,000 minus the 15. That's where we got the 55 from. So in total, if you just add up these amounts, the 45 and the 55, we get a total number of units of 100,000 units. Okay, and you don't really need to fill in the rest of this. You can just simply put 100,000 here, your total, but you could do the reconciling amounts, but just keep in mind it would be the ending finished goods for the 6-month period rather than the quarter, and then the beginning finished goods inventory for the 6-month period. So that concludes the production budget, our second budget. Now next we're going to do the direct materials budget for crop. So we need information regarding crop. Here goes our inventory levels for the direct raw material crop in pounds. 9,000, 12,000, and 15 for the beginning of the respective 3 quarters. And it goes on to tell us that crop, so the direct materials, each bag 2 consists of 5 pounds of crop. So you need 5 pounds of crop to make 1 bag of basic 2. And it's a cost at $3.80 per pound. And for the dirt, we need 10 pounds of dirt, and that's $1.50 per pound. So we're just going to use the first row information because that relates to crop. So keep those numbers in mind. 5 pounds of crop at $3.80 per pound. So going back to our direct material budget for crop,